Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we have Barry Dawes, who's Executive Chairman of Martin Place Securities. Welcome to the show, Barry.
Thanks, Kerem. Delighted to be here, and thanks for the privilege and opportunity.
Let's begin by talking a bit about your background in the markets, how you began your career, and what led you to focus on the commodity markets, and in particular, gold and silver. Can you give us a brief overview?
Yeah, look, I always loved rocks, and so I studied geology at school and at university and graduated as a geologist. Unfortunately, there weren't too many geology jobs available at the time, and ended up working in Canberra in the Department of Minerals and Energy and looking at minerals policy. And so I learned a lot about commodities. I ended up being the administrator of the International Tin Council's export quotas, and we looked at a whole lot of other projects around Australia where they were looking to export their products. So it was quite a fascinating introduction for me. And after that, I worked in London for a couple of years with Lead and Zinc Development Association, which allowed me to see metals being used downstream in the various areas from lead mills through to pigments and plating and die casting and all sorts of other things. So I was able to get a very broad range of experiences right from the beginning. And because that particular organisation was funded by the Commonwealth lead and zinc producers, I got to meet a lot of the people from things like CRA and AM&S and EZ Industries. Now, these are old companies, but they were part of the game. But and from there, I was able to come back to Australia and work in the funds management business. And very opportune that it was in the beginning of 1979 when I joined, and the gold price was starting to move. And over the next 12 months, we had it running from about $400 up to $875, which was a pretty exciting time. And that sort of gave me a bit of a feel for the dynamism of gold and what it really meant. And at that stage, Australia was only producing about 20 tons of gold, which is nothing very much at all. But the industry awoke from a very long slumber, and within a decade we were producing over 250 tons. So there were a lot of dynamics there in terms of companies, projects, mines, exploration, a lot of corporate M&A and all sorts of other fun things. So it was a really wonderful period to get all that experience.
Barry, you're based in Sydney, and so I think it'd be interesting to talk about the Australian market for commodities and the ASX and the difference between what you are seeing in Australia for the mining sector when compared to North America. You recently tweeted about how gold and gold stocks in Australia have been breaking out, while North America is only just now starting to catch up. Can you talk a bit about this?
Yeah, look, being in Australia is really quite good in the sense that we're in the Asian time zone, and consequently, most of Australia's exports go to China from the resource sector, and we've got three really big exports, which are iron ore, coal, that's coking coal and thermal coal, and LNG, and they're almost the same size at the moment, and that brings about 250 billion dollars a year in as export revenue. So it's very, very important. So we tend to focus on Asia, and unfortunately most of the commentary on gold seems to be really out of the United States, or maybe a bit of concern about Europe. But sitting in Australia, you're not caught up in all that sort of near-term fear or greed or whatever. And you can look at the drivers. Now, I've taken a very different position from most people I know, and in the sense that I'm a bull on the equity markets, I'm a real bull on Asia, I'm a bull on gold, and I'm not necessarily a bear on the US dollar. We know all about the debt issues and so on, but being in Australia, you're not you've got other issues, and because we're exporters, we really have to have an external view of things. So I think it's given us a nice position. When we look at the Australian companies, and as I mentioned, we went from 20 tonnes to 250 tonnes in a decade. We peaked out in about 1997 at about 312 tonnes, and then declined thereafter for the next decade, even while the gold price went from $248 up to 1920. So there were some strange things that were taking place, primarily because of major overseas companies had bought all our major mines, and it really meant that the whole industry was really decimated. But when we had the Northern Stars and the Evolutions picking up some of the assets that the Barricks and the Newmonts and other people were selling, it really allowed the industry to develop very quickly. There was a great drive to cut costs, to think about more technology, and just be a lot more dynamic. And it's been those Northern Stars and Evolutions and St Barbaras and Regises that really have been well ahead of the market. Our gold index, our gold stocks in Australia bottomed in June 2013, which is well ahead of everything else. And then our gold index bottomed in November 2014, which was a year ahead of what was going on in the States. And because these, I call them entrepreneurial geotechnicians, mining engineers and geologists and whatever, because they were really so astute at getting these projects up and running and cash flow positive, and using technology and productivity and efficiency drives everywhere. And the $8 was a bit lower. The $8 hasn't been all that much lower than the Canadian dollar, so we can't say that that's just the main reason. It's really because the industry itself was so dynamic and was able to get its costs down. So those people have been able to generate a lot of cash. Most of them have paid down whatever debt was there. We've got cash levels in the Australian gold industry, the like of which we've never seen before in the entire mining industry in Australia. The BHPs and the Rios have got lots of cash as well, and people having anything to do with coal or iron ore are doing very, very well at the moment. But it's the fact that you've got these entrepreneurial people. It's allowed Northern Star to go into Alaska and buy Pogo quite cheaply, and I understand that they're doing a really strong culture change there, and we're looking to get much better productivity out of that. And we've just seen Newcrest look to buy Red Chris in British Columbia, and it's the technology that Newcrest has been developing in its block caving that it makes it a world leader in technology.
Let's move on to a different market. Let's move on to copper. And how do you see the new bullish demands from, say, electric vehicles and the infrastructure surrounding them as a potential driver for copper going forward? Is the EV story real for you? And if so, are there any other metals that you like the look of?
Look, starting with copper, I've always loved copper, but it's a beautiful color, and it's lovely tactile metal, and there's always something special. And if you ever go in the field and find some native copper, it's a very, very exciting thing. But copper is the third biggest metal by consumption tons. It's had about a 3.3% growth rate since 1900. It's just a really wonderful long-term growth rate. It's just everywhere. It's in motor vehicles, yes. It's in power generation and transmission. It's in hospitals. For bactericide. It's in your home. So it's ubiquitous, and it's just a marvelous metal. China takes about half of it, and by the time you put in India and ASEAN and everything else, Asia takes about 65% of all copper. So that growth rate is, whether it's 3, 4, 5, 6% in individual countries, it's just driving everything. And so I could just see that we've got shortages developing not too far out at all. And I think that we're going to have quite a boom in copper prices, and also exploration and development companies. But as far as electric vehicles are concerned, yes, they're going to have a lot more copper. I'm a climate change denier, being a scientist and looking at the geology and having looked at all the weather stations in Australia over the last 150, 160 years. There's absolute no indication I could see of any indication of any global warming. In fact, in the regional areas, it's actually declining. But anyway, that's empirical evidence. So electric vehicles are wonderful in concept. I'm not quite sure where we're going to get the power from to drive them all. But even if we got 100 million vehicles in by 2025, it would make up about 8% of all vehicles. And I think they're pretty neat technologies, and I think that they're wonderful in the longer term. But yeah, copper, I think, is just going to be very exciting. In Australia, we've got the Patterson Range discoveries, which are really creating a lot of interest. You've got Greatland Gold and Telfer for Newcrest, and Winu for Rio. There's about half a dozen small companies that have got good acreage there. We've got something very, very special happening in South Australia, with some technology there, looking at deep-seated conductors, plutons, and where it comes up for places like Carrapateena and Olympic Dam and Prominent Hill. And we've got a lot of activity in New South Wales. Cadia is one of the world's great gold mines, and it's producing copper as well, porphyry copper. A lot of activity in New South Wales and Queensland. So it's going to be very exciting, I think, to be in copper and to be in Australia.
I know you have done a lot of research and analysis on the Pilbara conglomerates in Australia and on some of the work that Novo Resources and others have been doing. There has been a lot of excitement surrounding this regarding the potential of a district scale discovery. So what are your thoughts regarding this now? And are you a believer in that story?
Oh, yeah, I am a believer. I've been up to some of the sites, done quite a lot of work. I'm following Novo reasonably closely. I think that Beaton's Creek is going to be something pretty interesting, and Edgener, interesting. Comet Well is still a bit problematic in terms of just getting the right understanding of it all. But there's so much gold in the Pilbara, and I think that there is a real parallel with the Pilbara Craton and the Kapval Craton in South Africa, and the Fortescue Hamersley Basin, which is sitting on top of the Pilbara Craton, and the Witwatersrand, which is sitting on top of the Kapval. They're the same age, and there's a lot of similarities. There are great differences. But it's going to be a matter of proper understanding. And I think what Novo's doing, if people watch it closely, it's very, very exciting. But if we step back and think of the area of the Fortescue Hamersley Basin, it's actually bigger than the Witwatersrand. And if we think of the gold content of the Wits, it's about 54,000 tonnes of production, and by the time we take another 30 or 40,000 tonnes of resources and let's say another 10, 15,000 tonnes of mineralisation that will never be mined, you've got about 100,000 tonnes of gold endowment there. And the next biggest thing we've got anywhere in the world is only about 15,000 tonnes. So the Wits is huge. If we look at the area in the Fortescue Basin and think of the Quinton-Hennigh precipitation model, it really means that a lot of gold has been precipitated over a very, very large area. And it's a matter of, will we be able to find any commercial accumulation within that vast area? And I think that the endowment is going to be something really, really big. But whether it's ever going to be mineable, I'm not sure. But I think Beaton's Creek is going to be a real leader, and Edgener is going to provide another way of looking at it. So, yeah, look, Australia is producing about 325 tonnes of gold at the moment. We've got that extraordinary Fosterville discovery. I think we're going to find more Fostervilles in Victoria, and I think we're going to find a lot more gold in the Yilgarn because of the way that's developing, and I think that over the next 5 or 6 years, we're not there yet, but I can see it being a big contributor to Australia's gold production.
Let's talk about your investment framework, Barry, and the process you go through to find undervalued assets and asset classes. Do you always use a mixture of technicals and fundamentals? And throughout your career, has your framework on looking at the markets had to change and adapt?
Oh, look, as one gets experience and maturity, you always look at things differently, and also the time of your experiences also changes, and the external environment can be very, very different. The the thing that I've learned, which I think everyone should try and understand, is it's really markets are all about the flow of capital, and it's been my view for a number of years, and this has been very, very helpful to me, is that there's been an overweighting of capital in the cash and the fixed income, the bond markets. So we had about $100 trillion tied up in bonds, and probably the best part of another 40 or 50. Oh, that's probably too big. 30, 40 trillion of cash on the sidelines. In Australia, we've got 1,520 billion dollars in bank deposits compared to about 150 in 2000. So there's been a lot of funds that have gone to the sidelines because they're scared that the end of the world's coming and the debt position is going to affect everything, and the US stock market is going to collapse and China's going to fall over. Now that's been the story for the last 10 years, and none of that's happened. And so if we think in terms of the flow of funds, as people say, well, look, it hasn't happened, well, maybe I can put my toe back into the water. And I think the cash can drive the equity markets and commodity markets, and particularly the precious metals, for quite some years yet. So that's my basic framework. When I look at the companies, because I've got my geological background, I can look at deposits, and having seen quite a few, I can use some inductive reasoning as well as deductive reasoning in terms of what might be there or what type of deposit, what style of deposit it is. Lots of things are very, very different, so there's always new things you're going to find. So lots of opportunities from a regional sense in Australia, and then we look at management, and of course you've got to look at the net present value of a potential deposit. So we look at that, but what I've really been also saying is that look at the markets, and look at a lot of markets and see what the markets are actually telling you. So I say heed the markets and not the commentators. Now there are lots of commentators can talk about what's happening in the market today or yesterday or next week or a month ago, but often it's just reactive, and it's not particularly perceptive, and it's not particularly helpful. So and a lot of it I find is sort of politically driven or cynicism driven or whatever. And so people who read newspapers or blogs or whatever are going to be given information which might not be factual and accurate and timely. And the perception is everything. But so if we sit back and look at the markets, and what are the markets telling you, and they're telling to me we've got a global boom. I've been talking about this global boom for the last 4 or 5 years, and it's just unfolding despite all the negativity. So the framework is, hey, this boom is underway, and the technicals are telling us that. The mood of investors and participants has a lot to do with it. We've had a lot of misery and pessimism over the past decade, but time is passing, the world is moving on, and we haven't got time for all the bears anymore. So the mood will change, the cash will flow, and the opportunities will be enormous. So when we look at the Australian market, our gold stocks are leading, our big mining stocks are leading, They're outperforming the S&P 500 in the big stocks for the Rios and the BHPs. The gold stocks in Australia are outperforming the North Americans. They make up about 23% of the GDX and 21% of the GDX and 23% of the GDXJ. So they're helping that index move higher. But I think it's a very, very positive outlook, and you can be positive and optimistic without worrying about the end of the world coming, the gold price going to the moon because of the fear trade. But it really is the Asian love trade, which is tightening up the markets, and so much gold has gone from the west to the east that there ain't much gold left in the west, so it will be a tight market. So that's the thesis, that's the story, the thought behind it, and almost every day I find that there's more and more confirmation of my fundamental outlook.
At the beginning of this interview, you mentioned about being around in 1980 when gold was at the height of its mania. So can you give us a sense of what it was like for the average investor back then? And do you feel we are on our way to repeat that same situation?
Yes and no. Well, first of all, the 70s was a decade of a lot of volatility, and we had OPEC issues, and we had the 74 5 recession, and we had inflationary pressures, and they had been really flowing from the 60s with Lyndon Johnson's Great Society and the Vietnam War, and an explosion in money supply. And then we had Nixon finding great difficulty in keeping the gold reserves transferable directly into dollars, and so he had to close the window, and basically going off the gold standard changed everything. So it just absolutely changed everything. So that was a really interesting period. In the late 70s, we had the fall of the Shah of Iran. We had OPEC upping the ante on pricing, and so it was quite an inflationary period. And at that stage, people were very excited by gold, and that run up into January 1980 was quite spectacular, and it was very spectacular in terms of the way the stock markets performed. But the markets were much thinner then, and so the impact on the markets was exaggerated. Now we've got a lot more opportunities for investment, whether we're talking about the gold companies themselves, gold itself, or ETFs, and so on. So it's been a bit muted, and generally speaking, we've got too many Warren Buffetts and the type investors in the world, in the sense that they're driven by cash flows from predictable businesses, and that's not the nature of commodity markets. And so those type of investors aren't looking at the commodity markets, and they'll only come into the markets when we get a bit more volatility and higher prices in them. But and because of the character of this, I just see it taking about 15 years to unfold. That sort of 78, 79, 1980 gold price run was a spurt in a very short period of time. I don't see it happening this time, but I do see a much higher gold price over time, and it will be moving up more steadily. I mean, obviously in spurts and pullbacks and so on, but I don't think it's going to have the same thrust that we saw in that period in 79-80.
Okay, well, as we begin to wrap up the show, Barry, is there anything else you wish to share with our listeners today? Anything else on your mind?
Look, I think everyone needs to realise that Asia is, and here we're talking 1,400 million people in China and 1,300 million people in India, 800 million people in ASEAN, and they all want that middle class life, and they're moving to that steadily, and it's just been extraordinary seeing the changes in China since I went there the first time in 1982. But we're seeing those changes everywhere, and I think Africa, with 1 billion people, it's growing quite quickly, and I think we're going to find some interesting things there. So the demand for commodities will just continue to grow, and I think we're going to have this push against supply capacity, which is not going to be easily changed, because we just haven't spent the money on exploration and development of whatever's been found to date. Environmental standards are extending the periods that is required to get these mines up and running. So it's a structural thing which I think has got a decade at least, and probably two decades to run. So people who've invest in the resource sector, I think, can do it with an enormous amount of confidence. But I think people will do extremely well in the big companies, and they'll do outstandingly well in the small companies, but they'll be far riskier and it'll be harder to choose them. But having a portfolio approach to their investment, and don't be a short-term speculator, be an investor, have a broad portfolio, no matter how big or small you are. And I think that you will just get outstanding returns. And this time round, the mining industry will be paying a lot of dividends. Really important point. A lot of cash is coming out, will be paid to shareholders.
Well, thank you for being on the show today, Barry. Very much appreciated.
Thanks so much, Kerem. It's a pleasure. Thanks for the opportunity.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?